That's the word coming in from Oppenheimer Fund CIO Krishana Memani. He says that financialization is a big theme for the nation and private banks are going to be the biggest beneficiaries. Let's listen in.
We as investors like the long-term trends, but we just don't like the valuation that much, and that is the kind of that's the sort of issue we are dealing with.
Right. So, do you see a cyclical recovery coming in earnings anytime soon?
If you are a long-term investor and want to invest in the country for the next few decades, India is a fantastic destination. And that's the approach most of us have taken.
Let's talk about sectors like private banks, which are at a record high. Kotak, HDFC Bank, IndusInd Bank. What is your call there?
So the private banks, in our view, are one of the better opportunities in the Indian markets, despite their high valuations. And the reason for that is relatively straightforward. The financialization of the Indian economy continues, and there's a lot of growth opportunity in that space. And the public sector enterprises in that market opportunity haven't been able to deliver, and they continue to struggle with their NPAs and things like that. So the outlook for public sector enterprises is improving in the banking sector because of the NPA resolution regimes that the government is putting in place. But from a longer-term perspective, the biggest beneficiary of the financialization of the Indian economy are going to be the private banks.
So, Krishna, how is it that you analyze the environment of the market in the medium term, and what factors, according to you, are at play right now?
So, as far as the Indian markets are concerned, there are a couple of issues. One, growth in India is reasonable. And I think at the micro level, at the company level, the outlook in India is quite good. The challenge India faces today are twofold. One, the higher oil prices clearly have implications for inflation and current account deficit, and the strength of the dollar, although the dollar isn't very strong, but it clearly has strengthened, and that puts a dent in all emerging market, not because emerging market growth is going to slow down, but the investors' desire to invest in emerging markets from developed markets slows down. So those